real inflation. Unfortunately, the numbers, the way that they are quoted not really accounting for a big percentage of food and energy. Okay, and I'm telling you this, that the average person, the average family spends more on food and energy than they account for, and that's why the number is coming down. But at the end of the day, eggs are $8 a dozen. A loaf of bread is, I saw, $5 and $6 for a loaf of bread. The only thing that has come down recently is the price of oil. And that is very suspect whether or not that's going to stay at these low prices. However, the price of oil is still 50% higher than when President Biden took office. So I call those numbers garbage. They're ridiculous, and they are an embarrassment to report, let alone an embarrassment to celebrate, because they're wrong, and the average consumer is struggling to make a living. In Chicago and in Las Vegas, eggs are $8 a dozen. Well, they're blaming it on the bird flu, but of course, remember, when you see the food in the grocery store, it just didn't get there by magic. Either the chickens were raised to produce the eggs, or the wheat had to be grown to create the bread. And again, I would not be surprised at some point this year we'll see a $10 loaf of bread somewhere. Whose salary is keeping up with the inflation or the hidden tax that the government likes to put on you?
True.
Okay, again, I can give you a very factual statement that I made a lot less in 1995 than I make in 2022 or 2023. And I can tell you that what I made in 85 was a lot wealthier than it is in 2023. So that our wages never keep up with the rising inflation, the rising taxes, and the hidden taxes that government likes to put on us by bailing out banks and by bailing out ridiculous companies that should be let to go bust. The first thing you have to do to bring it down is you need to go back to producing your own oil. The big swing pin or the big hedge pin in here is the cost of oil, because not only does the cost of oil cost you at the pump, but it costs you at the supply chain because of the delivery. Remember, that stuff's got to get delivered to the store. Farmers got to use a lot of oil to make production. So it's an event that if you had your own and weren't dependent on paying what we're paying, and yes, we're only paying $76 a barrel, $79 a barrel as of right now, but we're going a lot higher, because you don't think Saudi Arabia is going to sit back. They're going to do what they did in 2004 and 5 and put a squeeze on the oil once we're all back and comfortable. You can have a green environment all you want, but you cannot break your supply chain nor break your people trying to get there. So the cost of producing all these goods is dramatically higher, and farmers are struggling because the margins are shrinking because of the input costs, and that they can't raise fast enough to keep up with it because the average consumer cannot afford it. If this continues, we have to tie one more thing into this: the Federal Reserve hiking rates into a recession. You can call it a recession or not. I call it a recession, but the Fed hiking rates. Okay, so as we look forward, what's going to happen? Well, people eat protein. Well, the number one protein that people like to eat would be, red meat, steak. Now, obviously, you're a vegan or vegetarian, it's not your choice. But in general, that is the delicacy or the top of the line. So the next step is they start eating pork, because that is the other white meat that is also protein. And if that protein doesn't hold them, then they go down to poultry. Okay. And they go down the line, because you do need protein in your diet. So that's why you're seeing the cattle markets and the hog markets in these ranges that have been basically circling around a band depending on what the price of oil is. So if oil continues to rise, then I would suggest cattle will go lower and hogs will find a stabilizing base if they can still afford that. Again, it's going to come out of the amount of driving you're going to do, which is going to slow down the sales into independent retailers. There's a whole big chain of events that are going to be affected here should this continue. And unfortunately, we can't get people to go to work, which is another problem, because we've lost 2 million full-time jobs since last May, and you can't even get people to go to work at McDonald's for $17 an hour, which is about double the minimum wage. One of the things I liked a lot was campus of rentals, right? Because the colleges are going to be open and kids are going to need a place to rent. And of course, those are very profitable places. But yeah, of course, you need to look at what the environment's going to support. At some point, the stock of, let's say, you use Mercedes, at some point, that'll become a value issue if it gets cheap enough. And then, at certain prices, things are value, but you always have to be able to weigh the value of the company and the way the value of the company is going to be, and project out years in advance. And the biggest thing you want to project when you're investing is that company going to be in business 10 years from now? That's what you're really concerned about, because again, if we use just the basic metrics of the stock market, it has gone up 8.5% year over year since the inception. And I don't expect that to change, because again, America is a very strong country. And because there are elections every 2 years, there can be some dramatic changes to the policies that are being established. I'm a big believer in being in the stock market. I'm always 100% invested, basically, and I'm using derivatives to protect, hedging to the downside. But what the average investor has to remember is, when you're investing in anything, invest money that you're not going to need tomorrow. Okay, invest money that you're not going to have to go back and pull it out later, because if you really need that money back at some point, you're not going to get anywhere near the value that you put into it, because if you're selling it, you're selling it at a loss, you're selling it at a distress. And too many people have the habit of over leveraging what they think they have based on what they have in their pocket today. And I think it's very important to understand that when you invest, even like in gold and in silver, when I buy physical gold, I'm not buying it with the intention of selling it higher. I'm buying it in the intention of holding it forever, because it will continue to appreciate. The same in a stock market, which is why it's very important when you invest in a stock, not trade, but invest, that you believe that company has a period lifespan of 10 years or longer, so that it has a chance to grow and go through the market cycles. Because no matter what happens, if the country survives, the good companies will be right there with it. My advice is to be very careful. I think my advice is, if you're a Starbucks goer, if you go 5 days a week, go 2 days a week. Okay, you have to start to save money. You have to start to put away, because again, this does not look or appear that it's going to end anytime soon. We have a lot of problems in this country, from civil unrest to people not working, to people that don't want to work, to people living at their homes. You have to start to save money. That big thing is, you cannot allow yourself to get into credit card debt, because the rates that credit card companies charge you are called usury rates. Okay, and they're basically against the law, except that the credit card lobby is so strong that they got around those. Now, and you can't even bankrupt on a credit card company. And you just have to be much more conservative at what you do. So if you like to have a couple of beers a week, well, cut it down. Whatever you like to do, you're gonna have to cut down, because you need to build an emergency fund, because if something else happens or another thing hits the fan, you need to be prepared for it ahead of time, not chasing it later. So if you have debt on a credit card, for example, before investing, pay the credit card debt, because you're not going to make 22% or 25% on your investment, but you are paying 25% interest on that credit card. This is the loan sharking business, and there's supposed to be rates, but they always figure a way to get around it. But it's a very tricky model, and I can't give you all the statistics or data in a short period of time, but it's very tricky. But trust me, that you're paying in the mid-20s on a credit card if you're holding credit card debt and you're past due. You're paying well into the 20s, which I consider usury rates. Nobody can afford to pay that kind of interest. They'd go broke.
Right.
It's gonna be worse. This correlates directly to the administration that's in power right now. They have single-handedly destroyed small business, because a small businessman or woman cannot compete in a like business with somebody else because of their cost of goods and services and help, because they don't have enough revenue to create that. And this is all the policies that we've seen put into place since Joe Biden took office have been detrimental to the very people they're supposed to be supporting, which is small business. From the shutting them down during COVID, the independent pharmacy, the independent grocery store, they can't compete. So how can they be in business against the big guys when they can't compete on price, on help, and on service? So they've really done a number on small business and allowed Walmart and our Amazon to grow much larger, which is a very big problem in my opinion.